Ari, I don't know if it's, how I came up in the business. I started in the business in the summer of '03, literally as that cyclical bull market was just getting going. The first 4 or 5 years of my career went straight up, basically roughly, especially when you don't know what you're doing. It seemed like it was going straight up. So I was really excited for my first bear market at the end of '07 going into '08. Really, really excited about it. It was a great financial crisis. So, financials were a leader for the majority of that cyclical bull run prior to the great financial crisis. Then certainly, one of the groups that dragged the entire market down. So, maybe it was early in my career, I got a front row seat to the importance of financials as a sector for the overall market. And maybe there's something to do with that. But the way I learned that, Ari, is that we don't have bull markets without financials. And when I see European financials, right, the European financials ETF, right, particularly making all-time highs, and all these European banks doing well, and Indian banks making new all-time highs, and U.S. financials showing relative strength, like that just doesn't seem bearish to me. Am I just biased because of how I came up in this business, or do you think there's something to that?
Well, no, there's obviously in '08, and we've argued that credit conditions overall much stronger now than they were then. Even after a 20% drop, I'd argue credit conditions are not as fragile as they were even into the top in '07. So yeah, I don't think this is a 2008, 2.0. And obviously financials are the key difference between now and then, holding up much better. And I guess, you're going off the assumption is that banks are, the key leading indicator, and they are a key cyclical area. But, listen, you could point to semiconductors, that were more damaged on the way down. So I don't know if it's a full weight of the evidence in terms of measuring all the cyclical and defensive industries. I don't know if it's full risk on it.